Hey everybody, do not scroll past this. You've got to look at the title and hear what this topic is. If you're a business owner, you've got to know about this. I'm going to be shooting more and more videos about the tax reform and what its impact is going to be to us as business owners. Now here's the topic today. Entertainment expense, gone. We also need to talk about meals. It got cut big time, not good. So we're going to talk about meals and entertainment, just not entertainment. And I'm a little frustrated, I'm a little mad. There's some things about this bill and where the government giveth, the government taketh away. And we have some problems, and you want to know this before you go spend money and think you're getting a write-off and you're not. So I'm really upset about this. Now, I'm a CPA, I'm an attorney, best-selling author, radio show host. I'm all about helping small business owner around America. We're going to break it down right here. I'll give you my contact information, my newest book out on tax, building wealth, asset protection. You're going to love it. But let's get to it. Here is the big one. Entertainment. You used to be able to go to a show. You could go to a baseball game. You could go out and talk business with an employee or a client and go out and rent a houseboat. I mean, you could do all these different things. You could go snow skiing. You could go golfing. You could go to the spa. No more. It's gone. Is this crazy? This is no more. That's it. I mean, you may think there's got to be a loophole. Well, I've got two. I'll give two exceptions to this. Now, entertainment, let's write it up here. Entertainment expense is gone. Now, this is a big one, and it's scary. Now, if you've got questions, by the way, let me say, I'm going live on YouTube, I'm live on Facebook. If you're watching on YouTube, you got a question, throw it down. Live on Facebook, same thing. Let's get some comments going. I'll field your questions, I'm here for you. Now, here's the two exceptions. Yeah, buckle up. If you buy tickets or movie tickets or golf package or a cruise and you give it to an employee. So if you give an employee some entertainment perks, you have to include it in their W-2. Yeah, the employee's gonna love that. Hey, here's some theater tickets. By the way, you're gonna see it in your W-2. Now maybe an employee would say, hey, I don't mind paying taxes on $100 baseball tickets. It's better than having no baseball tickets at all. I don't know. But the point is, if you give your employees any benefits that are entertainment related, you got to include it in their W-2. Now let me give the second exception. We have a question. The second one is, here's the only way out. If you have a bigger business with employees and you do a social activity with all your employees, social activity with all employees, or of course the bulk of them, all employees, in order to build morale and have a business building experience, you can write that off. Now these are still 50%, but this one up here is zero. So the good old entertainment expense is gone, and then these two options are 50%. That's it. I can't find anything else right now. Now I'll keep you posted throughout the year. This is why I want to sign up for my newsletter. I've been doing it for 12 years, a free newsletter. Every Tuesday morning it comes out with tax tips, strategy, deadlines. I'll get you the link. But question.
Two comments to start out with. Lena says, thank you for sharing this.
Thanks, Lena, you bet. She says thank you.
Brandy says, if you have to use a skiing trip to close a deal, there's a problem.
That's a problem. Brandy says, Mark, I'm going to go on a ski trip to cut a deal. I'm going to take my board of directors river rafting. I'm going to go fly fishing with my business partner. Or I'm going to go to Alaska and go hunting with my biggest client. No write-off. No write-off. Now, here is something that we've been talking about is, could you write off the travel to get there? So you're going to go have a business meeting in Cancun. You're going to talk business with your board of advisors, your family on the board of directors, whatever. We may be able to write off your travel to get there and you show a valid business meeting. But you can't write off the entertainment and going jet skiing while you're there. Now we're going to come to meals in a minute, but it's scary. More.
One question, Lubna, if I'm pronouncing it correctly, says, how about you record them as networking and marketing expenses?
Okay, now Lubna, she's looking for a loophole. I like it. She says, well, can't I call it a marketing expense? If there's an entertainment aspect that you're participating in, under audit, you're going to get shot down. Now, marketing expenses paying for ads or radio spot, a TV spot, printing material and all that. But saying, oh, I gave someone tickets to the theater, so that's a marketing expense. I couldn't sign off on that on your tax return. That's going to be entertainment. It's not a marketing expense. Scary. I know this is really bad. Now, many of you business owners are like, what the crap? Well, you get this 20% deduction of your net income at the bottom at the end of the day. That's the new law. That's discussion for another day. And watch some of my older videos on that. Get with me. Any questions on YouTube? Corey?
How can one who would like to engage in tax avoidance and not tax evasion, who is net worth north of 7 million, drive tax down to 0? Sharon, trust?
Okay, all right. So we have a question. This is fairly unique. They said, hey, I've got 7 figures income. I'm making a lot of money. And I want to drive my income down to 0. What can I do? Well, that'd be nice, right, folks? But I'll give you an idea. If you want to create tax-free income in your life, the best way to do it, I know this sounds crazy, I'm giving you a very unique niche here, is start building wealth in your Roth IRA. Self-direct, buy Bitcoin, buy Ethereum, buy Smartcoin, get a cryptocurrency, buy racehorses, do real estate deals. I have clients that have millions of dollars in their Roth IRA. They can then pull that money out tax-free. So now the person asking that question on YouTube is saying, how can I get to a tax-free income level? You got to chip away at it. It's a process. Doesn't happen overnight. Call me, we can talk about it, but that's a unique question. Okay, now I'm going to get into meals right now, and then we're going to do a little bit more Q&A, and I'm here for you. So the first issue is, and we've already been kind of summarizing this, is entertainment expenses are gone. That's red alert. Now, meals. This is where we get into some gray area. The first one is there's experts out there saying meals with a client may not even be deductible 50% anymore. Now, I'm not liking this. I'm doing more research. I want to find some sort of loophole or something we can hang our hat on. But some experts I rely on, and I'm seeing it all over the board right now as well, both sides of the argument, is that if I take my client out to lunch, I'm not going to the spa, I'm not going golfing, but I'm going out to lunch to network, I can't write that 50% off dining experience because it was related to entertainment. That's how I got to do it before. Now I can't do it because it wasn't really a meals expense, it was kind of related to entertainment. Meals and entertainment were kind of bundled together before. Now meals is getting kind of sucked into that, as if you've ever been at the beach in a wave and you're kind of getting pulled over the top. Since I try to surf once in a while, I know that feeling. Meals is getting pulled over the top and you're getting crushed on the sand. Not fun. So without the parallel, let me give an example that I'm being dumb. Let me just say again, if you go out to lunch with a client, there's arguments out there that you cannot write that off now either. You've got to stay in touch with me because I want to keep you informed on the meals issue. Be careful going out and buying meals every week right now until you know if it's a write-off or not. Next question.
This is a YouTube question from Grant. He says, is this all effective for tax year 17 or starting with new tax year 18 and moving forward?
Okay, Grant asks Mark, are these rules in 2017, 2018? When's all this take effect? What I'm talking about right now here is 2018. We're talking about right now, January 1st, moving forward. These are the new rules. Now, for your tax return last year, you're going to be able to write all this crap off, and I want you to really, get through your books and dig out all the expenses you can. But for 2018, it's looking ugly. So here's the next point takeaway from this live broadcast. Second point is meals with clients that were typically, and I'm going to put, typically 50%, they are now questionable. You may not be able to write those off at all. And there's a fury of debate going on that. I've got to be careful just coming out and say do it or don't do it. I got to be careful. I'll tell you, you're going to want to make sure you've got a position for that. Now, here's the third issue. Guys, there was food that you could write off 100% of last year. Let me give some examples that were kind of fun. You could do, now this is for 2017. So for those of you that are preparing your returns for last year, you could take 100% meals. Now I'm going to tell you how this changed in 2018, But let me tell you the current rule, or what it was in 2017, I could write off 100% of food if I had an office staff meeting. And we brought food in the office and we met during lunch and had a working lunch, 100%. Donuts on Friday mornings, drinks in the fridge. I could write off 100% of the food at a conference. So if you came to my Mark Kohler workshop in the fall, and I've been doing them for 8 years, you gotta come this coming fall, I provide lunch. I could write off 100% of the food at my conference. And then again, food in the office, food with staff meetings, food for my employees, and this was the cafeteria at the office. I could write that off. That was 100%. Now, in 2018, all of this, 100% stuff, down to 50%. Yeah, that's what it is now. So all of this crap that was 100%, now 50%. This is scary. This is not good. So, questions?
Well, number one, it sounds like the IRS wants us to go on a diet.
IRS wants us to go on a diet. Good comment.
Yeah, Carolyn says, what about catering to a networking event? Kind of just covered it, but catering, networking event.
Okay, so you're having a networking event, which means you're having a conference. So you might be hosting a party in your home. You might be holding an event or a conference network thing. It used to be 100%. It's now a 50% deduction. I have clients that buy pizzas for their Thursday night meetings. So that lots of people show up, they buy a bunch of pizza. 100% write-off before. It was for the people there. Now it's 50%. Sucks. Yes?
This is an interesting question from Chanel. She runs a daycare and she purchases groceries weekly. Will that still be a write-off?
So the question is food in the daycare for the children who are the customers. Think of it that way. I'm going to go 100% on that. Think of that like a restaurant. I mean, you're running a daycare, you're providing food for your customers. They're not employees, you're not networking, they're not partners. Those are those are customers, those little kids running around in your daycare. So if you buy chocolate milk and graham crackers, which was always a favorite of mine in kindergarten, you're going to get 100% write-off for that. Any other questions? Okay. All right, I'm going to keep rolling here. Now, what I wanted to say here is that bookkeeping. Now, here's an important. Okay, let's summarize here because I want to keep us on track. So I want to summarize the third takeaway for this meeting here. Now, if any of you want to sign up for my newsletter, I think Carly's probably commented there. You can go to markjkohler.com. markjkohler.com. You can sign up for my newsletter, and it's free every Tuesday. So just get over here to www.markjkohler.com. Now, the third takeaway today is that 100% meals in 2017 are now 50% in 2018. That's the third takeaway. This tax bill, this is a big thing, and the IRS loves this. They have been trying to fight this for years, and they finally stuck it in this tax reform bill. I don't know who, they were lobbying their senators, I guess, whatever. Okay, now here is the summary point I want to make on this. This is a big one, is bookkeeping. The one thing that you can do to help yourself get the best write-off here is to keep good records. And what you want to do is make sure that any meal that is close to being a write-off, you want to put it on a category 50%. And you want to try to find not entertainment, but these exceptions to the entertainment where you're going to include a W-2 for your employees or have a social event. You want to categorize these in your QuickBooks clearly. And if it's not a write-off, your business may pay for it, but then your accountant's going to back it off at the end. So talk with your internal bookkeeping team. Maybe it's you just with online QuickBooks. Maybe it's you just on Excel or a pad of paper. Try to categorize things as best you can, so at the end of the year, your accountant can piece it together. Okay, another question.
This is from YouTube, a little off topic. Joseph says, how does the new tax law impact real estate investments overall?
Okay, so Joseph said, quick question, he said about the tax reform bill, does it affect real estate investment in general or at all? The answer is generally no. For real estate investment, there was really no major change at all to our strategies. We're still getting depreciation. Real estate professionals stayed intact. All of the tables for depreciation, they were talking about changing them. They didn't. You can still do cost segregations as like before. Those are probably a little easier. But real estate professionals and real estate investors, nothing really changed. And you're a realtor or broker, or you're fixing and flipping, rehabbing, you're a contractor, you're gonna get this 20% deduction off the bottom line, which is a big deal. That's a good thing. But I'm hating this. Do not like this. All right, next comment.
Another YouTube, Greg says, would you say food at a real estate open house, which is available for the general public, is now only 50% as well?
Oh yeah, food at an open house. This is Greg asking, if I'm a realtor and I'm providing food at an open house on a Saturday, you would normally write off 100% of that. I'm totally good with that. Before. Now in 2018, it's a 50% write-off. Now guys, let's talk I'm gonna be a little political, or I guess in some ways, and say this. Is this good for business? You know, this is a business-friendly bill. It's supposed to help stimulate the economy. Well, what's it gonna do to the entertainment industry? I mean, if I was running a spa or a golf course, or I'm selling skyboxes at the stadium, my buyers are not getting the write-off they used to get. I think it's gonna affect the economy, or at least the entertainment industry. I don't like it. So, next question.
Michelle feels the same way. She feels like it's not good for the hospitality industry as well.
Yeah, she says hospitality industry. Probably a better way of saying it, Michelle. Thank you.
Now, Micah says, my husband is a travel consultant and travels frequently to meet with vendors, tour companies, hotel properties. Any tips on how these should be properly deducted?
First name?
Micah.
Micah.
And they're wondering if it should be a travel expense.
Okay, Micah says her husband travels a lot in the travel industry. There's a lot of, I travel a lot. Airfare, still 100% write-off. Hotels, 100% write-off. The business conference that I have to go to, 100%. The meals while I'm there to go to this conference are going to be limited to 50%. That doesn't change. But if I take someone out while I'm there to talk business, is that meal going to still be a write-off? I don't know. So travel is still 100%. Don't stress about that. Any final questions?
This is a good, interesting question. Paul says, what about food for employees working overtime? Is that still 100% deductible?
Nope. So Paul says, what happens if I buy food for my employees that are working overtime and I bring in food at night? Usually 100%, right, Paul? That was 2017. It's the new world now. It's 2018. 50%. Yeah. Go throw a dartboard at someone. I don't know. I'm not happy about it either. So let's wrap this up, folks. Being a small business owner is still awesome. This tax reform bill, this is the time to start a small business. Are there some crappy write-offs that are, great write-offs, and it's a crappy deal, we don't get the write-off anymore? Yes. There's a few things that really kind of suck in this new bill, to be frank. But business is a great way to build wealth. Buy rental properties. Live the American dream. Don't give up. Everybody else, I'm not saying quit your day job, but have at least a small business on the side. I've got a weekly newsletter, an awesome YouTube channel. Get over there. 80 plus videos on there. I'm going to be teaching you all of this every day, every week for the next, eternity, as long as I'm alive, helping you here. So don't go anywhere. Now, we've got a couple last questions. I guess I'm going to hit this real quick. Yes?
Joseph, how does the new tax law impact real estate investments overall?
Oh, we already got that one. We're good. Thanks, man. Okay, so I'm just working with my team here, and I want to give a big shout out to my team. They do a great job with these live Facebook Lives. An entrepreneur, Ryan Shea, and his commitment to entrepreneurs around the country, unparalleled. So keep following Entrepreneur on the social media. Get their sign up for the newsletters. And guys, don't give up on your American dream. It's real.